Our first question involves calculating the loss payable after a fire incident. Turnover before fire, 50,00,000 standing charges, 10,00,000 net profit, 5,000,000 turnover after fire, 25,00,000 calculate loss payable. The answer is option A, 750,000 rupees. By calculating the gross profit and applying the rate of gross profit to the reduced turnover, we arrive at the payable loss of 750,000 rupees. Next, we have a question about the category of spontaneous combustion for oily and greasy waste. Which category does it fall under? The correct answer is D, category 4. Oily and greasy waste falls under category 4 of spontaneous combustion. In this question, we need to calculate the amount of loss payable given sum insured Rs 20,00,000 market value Rs 25,00,000 loss, Rs 2,00,000 calculate amount of loss payable. Let's find the correct option. The answer is option D, 160,000 rupees. By using the formula sum insured divided by market value multiplied by loss, we get 160,000 rupees. What is the minimum sum insured for a floater policy? Let's explore the options and find the correct answer. The correct answer is D, no such limit. There is no minimum limit for a floater policy, but there are minimum limits for declaration policy, which is 100 rupees locks, and floater declaration policy, which is rupee 2C with minimum 25 rupees locks at any one location. Particular stock is insured under normal SFSP policy, stock declaration policy and marine policy with SI of rupee 1C, rupee 2C and rupee 3C respectively. If there is loss of 60 rupees locks, and same is admissible under all policies. How much will be paid by SFSP policy? Options are A, 60 rupees locks, B, rupee nil, 20 rupees locks, 50 rupees locks. The answer is B, nil. According to the marine clause, if a loss is covered under both marine and fire policy, the marine policy pays first, and the fire policy covers the remaining amount. Which statement about flop policy is not correct? Let's identify the incorrect statement from the given options. Correct answer is option C, flop policy can be given for gross loss. As flop policy can be given for net loss but not for gross loss. In this question, we need to calculate the refund premium for a declaration policy with various sums insured. Mr. X has taken declaration policy for his stock with sum insured of rupee 100C. He has made following declaration for all months: rupee 50C, rupee 30C, rupee 10C, rupee 80C, rupee 70C, which is declared after 2 months of the declaring month, rupee 90C, rupee 10C, 10CR, rupee 200C, rupee 10C, rupee 20C, rupee 30C. Let's determine the correct refund amount. The answer is C, 5 rupees locks. Declarations for the month of late declaration are not declared to be taken as full sum insured. Declarations noted in system are 50 plus 30 plus 10 plus 80 plus 100 plus 90 plus 10 plus 10 plus 100 plus 10 plus 20 plus 30 equals 540 rupees. CR average equals rupee 45C. By taking the average of the declared sums and applying the retention rate, we get a refund of 5 rupees locks, as we need to retain minimum 50% premium. Under the Bharat Griha Raksha policy, what is the automatic cover for home contents? Let's find the correct percentage and maximum limit. The correct answer is B, 20% of the sum insured with a maximum of 10 lakhs. This is the automatic cover provided for home contents. Don't forget to like this video, comment how do you like, share with the friends, and also subscribe this channel. XYZ Limited opted for 20% escalation in SFSP policy, in which following assets are covered: building 100 million rupees, PM, 200 million rupees, stock, 500 million rupees, triple times F, Rs 20,00,000. Calculate the escalated sum insured. The answer is B, rupee 110C. Sum insured for escalation: 500 million rupees, building rupee 10C plus PM rupee 20C plus triple times F rupee 20C. Escalation clause is not applicable for stock. Escalation 20% equals 500 million rupees times 20%. Escalation sum insured equals Rs 10,00,000. Escalated SI equals rupee 100C plus rupee 10C equals rupee 110C. Which of the following is an optional cover under an IAR policy? Let's identify the correct optional cover from the given options. The compulsory coverage includes fire insurance, burglary insurance, machinery breakdown, boiler and pressure plant insurance, electronic equipment insurance, and fire loss of profit insurance. Optional coverage includes machinery loss of profit. So answer is option D, MLOP. Waste of category 2 material will fall under which category? Waste of any category falls under the higher category, which is category 3 in this case. Please like, share and subscribe. Additional expenses of rent for alternate accommodation is applicable for which of the given options? Non-manufacturing risk is the correct answer for additional expenses of rent for alternate accommodation. For which of the following goods can a policy on contract price be issued? Options are A. Goods of local manufacturers. Any finished or semi-finished goods. Imported goods. Goods held in trust. Answer is option C, as imported goods are eligible for a policy on contract price. In which of the following situation, declaration policy cannot be issued? Options are A. Short period policy. Stocks undergoing process. Stocks at railway sidings. All the above. Declaration policy cannot be issued for short period policy, stocks undergoing process, and stocks at railway sidings. Correct answer is option D, all of the above. Select the correct option for the statement. A perfect party wall is. A perfect party wall goes through the roof and 2 feet above. Please like, share and subscribe to show your support. All the best for your exam.